Today I'd like to introduce to you Bridget Sakr, who's the Chief Commercial Officer of Genworth. Genworth is one of Australia's leading LMI insurers, and they're also a very strong supporter of MFAA and one of our sponsor partners for many years. It's in that context that we bring Bridget to you today to talk about Genworth's Streets Ahead consumer sentiment research. Members will know that LMI is a very important product in the mortgage process. So Bridget, now over to you, and could you tell us a little bit about the research and what led Genworth to start this research in the first place?
Thanks, Phil. Genworth has been in the Australian market for nearly 50 years, and over that time we have collected economic and mortgage data. But in 2007 we actually identified a gap, and we said to ourselves that there is consumer data that we could actually obtain that will help us overlay our data with what consumer sentiment's all about. And that's what led us to actually starting capturing that data to be able to look at consumer confidence, but not in line with other sort of general consumer sentiment indexes out there, but more around home buyer sentiment. So what our actual index looks at mortgage holders and would-be mortgage holders and their views around the mortgage market and their actual mortgages.
Bridget, I understand you've just completed some research this year. Can you outline to our members just what are the key insights that come out of the research? What are the key findings?
I can highlight three key findings. The first one is that the home buyer confidence index dropped by 5.1%. We do this index every 6 months. So since September last year to March this year, there's been a drop. Why is that? That's right across Australia. There's been this drop. In every state, there was a drop in confidence. And the reason for that is people are concerned about job security. So there is concerns around local and global instability, and that's reflecting in people's views on the mortgage market. And there is mortgage stress associated with that. What we're also seeing is that the first home buyer index dropped at a greater degree. It dropped by 12.8%. And first home buyers, to much the same reasons as overall, they were concerned about job security, but more so the government stimulus, the first home buyer grants that were out there have really played a big part in the aspirations of potential first home buyers, in particular in the states of Queensland and also New South Wales. And lastly, what a real key takeaway in the report is that it is still a buyer's market. In actual fact, 47% said it's a good time to buy. And that came down slightly from September, but still nearly 1 out of 2 do say it's a good time to buy. So it is a good buyer's market, and there is some really great opportunities. If you can actually tap into the psychic of the first home buyer market, whilst the confidence is down, they do believe it's a good time.
Bridget, it seems there's some conflict in the findings. On the one hand, we're seeing people are confident, 1 in 2 people still think it's a good time to buy. Yet on the other hand, we're seeing the research showing that people are concerned about the future, concerned about their jobs. Given that Australia's unemployment rate is still fairly low, in the low 5%, does the research give any insight as to why they would be thinking that way?
Phil, the research does show why they'd be thinking that way. The previous survey that we did in September versus the one that we did in March did show unemployment rates remaining fairly stable. But the concern that we saw that the consumers had was around underemployment, around the hours worked and whether they'll be reduced. The other thing about the Australian market at the moment is consumers are in the psychic of deleveraging, paying out their liabilities, saving as much as they can. And they are looking at continuing to meet these higher repayments, not necessarily adjusting for interest rate reductions. So the mortgage stress comes from that basis, whereby perhaps my job is at risk, my hours will be cut. We know there are many industries around Australia that are currently being impacted, and that's reflecting in the fact that can I continue to sustain my current repayments at the levels that they are, as opposed to perhaps the levels they should be when you factor in interest rate reductions.
And you think that insecurity relates to what's going on around the world? Was there any indication?
Yeah, absolutely. There? I think there is definitely global instability. We're seeing what's happened in Cyprus, that continues around Europe, and also around the local market in Australia. There are many industries at the moment still under pressure because of what we're seeing around the Australian economy.
So Bridget, there's some interesting insights from that research. Bearing in mind we're addressing this interview to brokers, what do you think are the key messages in there that brokers can take away in understanding consumer sentiment? What sort of things are in there that they can use in dealing with their clients?
Firstly, I think the report gives you a good profile of what the first home buyers are feeling. So there is, at the moment, in terms of the first home buyer in the market, it is at its lowest since 2005. 14.9% of consumers last year were actually first home buyers. So that is probably one of its lowest figures we've seen in the past. But what I can say is that it does give the broker the opportunity to know that information, to understand what the first home buyers are actually facing and what they're going through, and their thoughts around commitment and overcommitment. The other thing I think that we found in our report is that when a borrower is actually struggling, 45% of those borrowers that are struggling are going and talking to their lender about renegotiating their mortgage conditions, and 16% are going to a broker. So wherever possible, if the broker can educate the consumer, the borrower, or the existing borrower, that there are options for them if they are struggling, and retain their home is key, obviously key for the Australian culture and home ownership. What the research also actually shows you is opportunities. We do know that self-managed super funds are becoming increasingly popular in Australia, and this report actually identifies that. The ATO data does show there were 7,000 new members in the December quarter last year for self-managed super funds. When we surveyed the self-managed super fund holders, 1 out of 4 actually said they had a mortgage in their fund, and 75% was secured by a residential property. Now, of those that we did survey as well, who didn't have actually a mortgage secured by a residential property, actually said they would consider it. So there are opportunities for our brokers when they read this report to say, hey, are there markets that we haven't tapped into? And one of those being self-managed super funds.
So Bridget, in light of that research, what do you think brokers could be doing more of, taking into account the research?
Well, 41% of mortgages in Australia are actually originated by brokers, a key part of the industry. So what is critical for brokers is to continue the education and the awareness back to the consumer, back to their borrowers, around options, around how to get into home ownership, around the investment market, and also around hardship. If they do have customers on their database, if they are struggling, then they know their borrower. So to try and give them and provide them with the options that the lender and Genworth can assist. At the same time, I mean, the industry has really, over the years, looked at the professional standards and ethics of its participants, and the MFAA has played a real significant role in increasing the education and the awareness and the professionalism of its members. So I think continue doing what they're doing and continue getting the support from all the key stakeholders in the industry to make sure that they continue supporting the consumers in the Australian market.
Well, Bridget, that's fantastic research, and I'm sure our members will take a great benefit of it. If members want to dig further into the research, I know that the actual document is a lot thicker than just what we've touched today. Where can they access that document?
Please, we'd love you to go to www.genworth.com.au/streets ahead. All the information is in there. There is some great information on investors, their appetite to investors, self-managed super funds. There is information on gender and how males and females are viewing the mortgage market at the moment. And there's also information on age, how younger borrowers are viewing their commitments versus, the ageing population. So I do urge the brokers to actually have a read of the report. It also does provide state-based information. So if you're a broker that actually has national coverage, it does give you sentiment about the actual consumers in those particular markets. And there are some markets such as Western Australia that whilst the confidence has dropped, they still lead. New South Wales, it's dropped considerably. But again, there are many options out there, I believe, where a broker can actually use to help consumers get into that home ownership.
Thanks very much, Bridget. Members, I think you'll agree that that's been wonderful research, and you'll derive some great insights for dealing with your members, and you can also have access to the research on the MFAA website.